In this video, I'm going to show you how to use the economic calendar before you take a trade. So, as you can see on the Australian, on a Wednesday, there's the Australia CPI, FOMC member speaks, and crude oil. I think it's not a good day to trade. Maybe this. Maybe you can, but maybe look at your XBR or your WTI if your WPR if if uh, if you trade those things, crude oil inventories, yeah, maybe you can. So we start our analysis every time on the economic calendar. As you can see, there's a no trade over here. So what I don't understand what would push someone to want to trade on a day like this when you can wait on a day like this where there's German CPI, there's GDP quarter on quarter. There's unemployment claims on one day on a Thursday, and then on a Friday there's the CPI estimates again, and then there's core PCE on the US. So you have 2 more days which you can wait and start pulling the trigger maybe tomorrow. Yeah, start pulling the trigger tomorrow, and then possibly um, use your understanding of the markets and the analysis that we do. Now on to the charts. As you know, we started on the US dollar index. We start there. I wanted this to tap in here, and it did. It did tap in here. Did on this gap. So possibly if you go to the 4 hour, you will see that it has just broken the structure a little bit, and then on the 1 hour, you can understand that possibly you can let it come maybe here on this gap, or maybe here, and then maybe for tomorrow try and get a long setup. So just be careful of what you do and how you trade, because these events actually help you with your trading. Don't be afraid of trading the news. Don't be afraid of high volatility days. Just a heads up. So moving on to gold. Beautiful reactions on Monday, really. We spoke about this liquidity getting taken off, and then the sell off, as you know, and again another sell off. So, pretty much this level, after taking out that liquidity, we came in tanking down. So, don't forget the levels that we started on, that we are targeting. We're looking basically for 50% this, and maybe somewhere around here, or maybe take out this liquidity over here. So on the 1 hour, it's already simple for you. You've already seen how this level has played, and everything else. Now let's go to, okay, not silver. We trade silver as a secondary to the to the gold. So let's go to the D U the GBP, our cross pair, and yeah, if I would want it to go up again, it hit all-time highs on the GBP US dollars. I think it's a 2-year high. So basically, what you want to do is you just want to stop. Um, Please do not think that it's gonna go any higher for your own sakes and your own trading. Just don't think the GBP is gonna go higher. But pretty much good price action, I think. Didn't see an entry on a Monday, Tuesday, so hopefully tomorrow it can get up to here, and then tank it down a bit on the, maybe on the positive GDP numbers for the USD. Uh, this guy over here, yeah, start on the daily here. I think we hit quite these targets that that come set up this order block, but on a Monday, I think we wanted it for it to come to this gap. So still our target is still there. So on this gap over here, and then take the buy long maybe for the for that monthly target to be hit, and everything. So I'm still bullish, but hoping that tomorrow, as a retracement kind of a thing, it gets here and then it goes up, and then on the 1 hour, uh, possibly your entries, just don't trade. I don't see any setups, just don't trade. For me, it's a no trade day. I'd rather wait for tomorrow. The euro, I'm not gonna every day say price went in our way, price went into our favor. Just do your own analysis on the markets, and uh, spoke about this level here, the 50% of the order block, as you can see on the euro. That would be your target hit for the week, but I don't know what kind of a trader you are, but we spoke about that. So hopefully we'll take out this and then get the long buy here, and then get a turtle soup there, and then hopefully your NAS 100 pretty much going our way. Uh, it's I see relative equal lows over here. Maybe taking it here would be good, and then taking out these two relative equal lows, this one and this one, and then it would be it would be good. So I think it would be pretty much good trading. Uh, it was pretty much good trading from the Monday. Over here, we predicted this move down, and then everything else just went into a consolidation. So if there's higher GDP numbers, maybe a tank there, and then get a buy. So I wanted to leave you with this. I'm gonna include one cryptocurrency, which is Bitcoin. Bitcoin I've been tracking for the last number of years or days. So for those crypto boys that like crypto, this is one for you that probably you will like me for. So let's move over here. Since we've done everything with it, hopefully, if you want to enter into the short, possibly get it on this inversion fair value gap. Now, I know what you're thinking. You're thinking about the Australian dollar. Uh, I told you, once it gets these two guys over here, once it takes out these two lows, expect to sell. And yeah, it did quite that. I was up, and then yeah, I wanted to show you something. Uh, it depends really what you're here in the markets for. If it comes here and this is a gap and it's already past, remember we did the analysis when it was here. So I think this one was coming in with this. So it comes back, breaks the structure, and then it comes back and stands here for CPI. What do you think I'm still doing? Do you think I'm still bearish? Yes, of course I am, but not at the time of the CPI that I am. No, no, no. At the time of the CPI, I'm bullish because it's already broken the structure and it's showing me manipulation. After this manipulation, I managed to capture a move here. If you want that video, it's a 24-minute video. I think I was up 2% on a 100K account, on a 100K demo account. But I found that not to be realistic for this channel and what I want to do. So I kind of reset the account settings and then put it on $40. Yeah, I think if you can't get $40 as a trader, no matter how your circumstances are, I think you should continue learning, continue practicing, and then try and get something to do to get you that $40 or $20, maybe, and then give proper risk management and do everything. There's things like the 20 pip challenge where you can have 30 trades and get to 52K. They all have it with their risk management. So it's up to you what you do with it, but just don't go for big accounts if you don't have the big things. Just know that You're here with percentages, and you're here to make money. You are not here to implement your bias even when it's not on. So I think I took this, and then I put it down and then exited on a 24-minute video. If you want to, I can post it, but only if you want it. So yeah, it's the video which I did, and I show you exactly how to do um, the turtle soup. How to not be afraid of price when it manipulates this high and then it comes back here, and maybe hopefully by tomorrow we'll have a reversal getting here, and then yeah, possibly getting the long again over there. So this target is still applicable, but I wanted to show you how the market works after taking out liquidity. It's what drives the markets really, liquidity, and then takes it off. So hopefully you find today's analysis helpful, and yeah, happy trading, and keep on making those profits, and know which days to trade and not which days to trade. Adios.